Okay, in this video, we're going to go through a practice problem working with the accounts receivable T account, and we're going to use Royal Gold as an example. Now, Royal Gold is a Denver area company that purchases royalty interests in gold and silver mines throughout the world. And so Royal Gold's business model is to take a portion of whatever a mine produces. And so you can think of it as this mining truck hauling away ore. And Royal Gold has a royalty interest in whatever revenue is produced by selling that ore to a customer. And the way Royal Gold's business model works is that once the gold or silver is produced out of the mine, Royal Gold records an account receivable, and then subsequently the mining company pays Royal Gold for their royalty interest, and Royal Gold finally collects the cash. So let's talk about the journal entries involved here. Suppose Royal Gold owns a 10% royalty on the revenue generated by a mine. Here are Royal Gold's journal entries for this transaction. First, when the mining company produces and sells $10 million of ore to their customer, Royal Gold has earned 10% of that production. And so what Royal Gold will do is calculate 10% of 10 million, which is $1 million. They'll debit accounts receivable for $1 million and credit revenue for $1 million. And the reason they do this is they want to keep track of what mining companies owe them money. And this mining company, since it's produced 10 million and Royal Gold owns 10% interest, this mining company owes Royal Gold $1 million. So this is what we're doing. We're keeping track of that. Then eventually the mining company pays Royal Gold, so they actually send the check for $1 million. And when the check is sent, Royal Gold will debit cash, increasing the cash account by $1 million, and then reduce by crediting the accounts receivable account for the $1 million. So these are the two journal entries involved. And let me show you the accounts receivable T account now. And so accounts receivable is an asset, and so its normal balance is a debit. So that's where you see the beginning balance for accounts receivable. When Royal Gold earns revenue on account, they debit accounts receivable, and the credit is to the revenue account on this journal entry here. So this is what we're seeing in this T account is the debit to accounts receivable. The credit of the journal entry is in the income statement on the revenue account. Then when Royal Gold receives cash, they reduce their accounts receivable balance with a credit, and that's what this is. This is a credit to accounts receivable, and the debit side of that journal entry is in the cash account. And something that Royal Gold doesn't have to deal with is customer defaults. So in case a mining company ever did go bankrupt or something, they would have to write off that account receivable with a credit to the account receivable account. And there will be more information about that in the accounts receivable topic. Well, after you start with the beginning balance, add revenue recognized on account, subtract cash received, and subtract customer defaults, you get to Royal Gold's ending accounts receivable balance, which is a debit at the end of the year. So let's go through this practice problem, and the practice problem asks, how much cash did Royal Gold collect from royalties during 2018? And what I'm giving you to solve this problem is I'm giving you an excerpt of their balance sheet, the royalty receivables account, which is their accounts receivable account, and I'm giving you an excerpt of their income statement. I'm showing you the revenue. And so now what we do to solve this problem is recreate the T account for accounts receivable. And Royal Gold calls it royalty receivable. So royalty receivables is an asset account. So I'll write parentheses A, which stands for asset, and I'll draw the T. Now let's fill in this T account. So remember, this is an asset account. And so its beginning and ending balances will be on the debit side of the account. The beginning balance, so we're talking about cash received during 2018. So at the beginning of 2018, this was the beginning balance here. It was the June 30th, 2017 balance, was the balance at the beginning of the 2018 fiscal year. And so that's the number I'll plug in for beginning balance, and I'll plug it in on the debit side. And this ending balance was right here as of June 30th, 2018. And so I'll plug in that ending balance also on the debit side. And if you recall from the previous slide, the receivables account increases with revenue on account and decreases with cash received and defaults. So in terms of revenue on account, as long as Royal Gold doesn't have deferred revenue, which they don't, it's safe to assume that all of this revenue was on account. So I'll write revenue on account. So it's safe to assume that all of that revenue is on account. And so that increased the receivables T account, 459,042. And I'll circle the revenue numbers. So that journal entry, when Royal Gold recorded that revenue, the journal entry was a debit. Also, I'll write DR for debit, debit to accounts receivable, and I'll abbreviate AR for accounts receivable, and a credit to revenue. And I'll abbreviate revenue as well. Okay, so that's what the journal entry was. And the amount of the journal entry was 459,042. 459,042. I'll put a square around it. That was the journal entry. And as you can see, in the royalty receivable T account, you can see this debit is appearing right here. Okay, that's where that debit was posted. I'm not presenting the revenue T account. I don't need to do that to solve this problem. Okay, so finally, remember there are two items on the credit side of the receivables T account. The first is cash received, which is what we're solving for, and the second is defaults. Customer defaults. And I can tell you that if you read further in the Royal Gold 10K, you'll find that they deal with very high credit quality customers, and so they don't have any defaults. And so defaults is 0. And all that's required now is to solve for the empty box here, which is the amount of cash that Royal Gold received. And to solve for that, let's call that x, the variable x. So what we would do is we'll take 26,886 plus 459,042 minus x equals 26,356. And so that is the equation implied by this T account. You take the beginning balance, you add entries that are on the same side of the T account. So the beginning balance is a debit, we're going to add the debit. We'll subtract whatever is on the credit side, which is x, and 0, but I'm not including the 0 in the equation. And then put an equal sign to get to the ending balance, which is a debit of 26,356. And if you solve this problem, you'll get that the answer is 459,572. So that is a problem where we solve for the amount of cash a company received. And what we needed to solve it was the receivables balance on the balance sheet and the revenue from the income statement.